So I've been on another set of showings that, again, makes me question the industry standard for real estate agents. And my biggest beef today is the loan types that you are putting out there as being accepted by the sellers without actually educating your sellers. I showed 3 properties yesterday, and all 3 of them were listed as accepting all forms of lending standards. So that would be VA, FHA, conventional. I go and I show the first property, and the upstairs is fine. I didn't really see anything that would be an issue. However, the garage was so deteriorated that there were shingles just falling right off of the garage. And then you go back behind the garage, and there's a shed, and the shed is so deteriorated that there is half of the door rotted off and just missing. The garage that we saw, there was rotting at the bottom of the door, so that when you shut the side door that was on the front wall, the entire front wall shook, excuse me, and with that shaking, it created a shaking of the actual garage door itself. So those issues in themselves are not going to qualify for VA, FHA, or RD. Not to mention that it's in the city, so RD is just out in general. So we have issues with agents putting the wrong loan types that their homes would qualify for. The next house had obvious water in the basement with some horizontal cracking on the foundation and multiple layers on the roof, at least 3 layers on the roof. So right there, we're already ruling out VA and FHA because of the multiple layers on the roof, and not to mention that the horizontal crack could possibly rule out all lending types until it's dealt with. Then I get to the third house, and I am fuming at this point because it is clearly one agency that is not training their agents in how to do this. They're just checking all of the boxes. This house had original windows, and half of them had cracks in them. The roof was delaminating, as well as it's like the cement board flat style of the house. That was all rotted away, and they had just spray painted to the wood behind it so that they could hide it. And then the soffits were all falling. And what else did I see? We didn't even go in this house because there were 5 things that I saw. Oh, the driveway was so deteriorated that it looked more like crushed gravel than actual concrete. Not to mention that this home was in an area of all industrial. There's only 3 houses on this street of actual houses. My suspicions are that this is not a residential anymore and that it should be sold commercial, and they didn't advertise it that way. I did look on the government website and couldn't find that it was listed as a residential property anymore. Also, the government website had that house specifically listed as city water and city sewer. However, I don't need a thumbs up. However, the agents said that it was well and septic. So what is it? There's so many confusing things about this house, and it makes me so angry that people are not listing houses correctly. So in the spirit of listing things correctly, let's talk about what is called out on each loan type so that you can educate your clients, or just be educated yourself if you're going to sell a house, as to what loan types you could probably look at and accept. Let's talk about the FHA appraisal first. So these are things that I've personally had called out by either my buyers or when I'm selling a property by an FHA appraisal. Missing handrails. I'm not seeing this called out as much anymore, but anything that is higher than 18 inches usually has to have either the decking all the way, or the handrails all the way around it, and a handrail on the stairs. Sometimes it's called out, sometimes it's not. Cracked windows. This is a big thing. I do see cracked windows called out all the time. So if you have cracked windows, get them repaired. Termite damage. This is called out all the time. Whether it's called out in the inspection first and then we can show that it's been repaired, they will always expect a termite inspection to be given to them. Large cracks in the foundation or in the driveway, that is pretty self-evident. If you see a bunch in the driveway, or if you can see some effervescence where the cracks are in the foundation, we have some foundation issues that need to be taken care of. We have tripping hazards. That is a health and safety issue in the driveway. So if your driveways are falling apart, don't offer FHA unless they're willing to pour all new concrete. Loose and exposed wiring. This would be any kind of junction box that doesn't have a cover, or if you just have 2 wires spliced together that's not inside a junction box. If these are visible to the appraiser, they will call them out. And literally, it's a 5-minute fix. Just do it before the appraiser comes. Peeling paint or chipping paint on a home that's prior to 1978, and yes, this counts for if it's a deck and if it's a garage. They do the exterior and the interior. So if there's peeling paint anywhere in your home and it's previous to 1978, the home was built previous to 1978, take a paintbrush to it, take a scraper to it, because if you don't do it correctly after the appraiser calls it out, meaning you don't go in, actually scrape off all the loose stuff, repaint it, and then bring in a shop vac to get it all vacuumed up, they will tell you need another reinspect. Fix it and reinspect it. I had 3 reinspections on one house 4 years ago in Granville because the garage was not scraped correctly, and then the wood chips or the paint chips weren't picked up correctly, and then finally they were like, okay, yep, you guys did a good enough job. And then old wood, broken decks. If your deck can move, if you have wood that's split on your decks, pieces missing, there's all types of things. If your home's older than 1978 and your stain is peeling, they're going to call all of that out. So either fix it up front or be prepared not to offer it FHA or be prepared to repair it. You can't put all of these requirements. Well, if a buyer wants the house, they're going to do all these things. They will most likely not be able to afford it if they're going FHA. So either don't offer it FHA or be prepared to do the repairs. Now, VA lending has become a little less stringent than it used to be in the hopes of being able to compete with the more conventional loans. It used to be required that the seller would have to pay the closing cost and the termite inspection, and now some of that stuff can be negotiated by the buyer to pay for themselves. So they have kind of the same exact stuff. Excessive dampness, like if there's standing water in the basement, or if a sump pump's not working correctly, they're going to call that out. Cracked windows, that's a give or take. Sometimes they call it out, sometimes they don't. Termite damage, always called out. You got to have your termite inspection done. And then large cracks in the foundation and driveway. Usually they don't call this out if there's not evidence of water or if the cracks are still level. But I've seen it called out. Roof damage or multiple layers or just the general age of it will always get called out. Not to mention, insurance companies are not insuring roofs that, my forehead is driving me nuts. Insurance companies are not approving roofs that have less than 5 years left. So keep in mind that if you have an older roof, your buyers are not going to be able to get insurance on that. They're going to ask you to replace the roof so that they can get the insurance that they need to buy the house. Loose and exposed wiring, give or take. I haven't seen this called out a whole lot lately on the VA loans. Peeling and chipping paint, yep, this is called out. Old wood, broken decks, yep, this is called out. Water stains on ceilings, I've seen this called out once. And it did have a bad roof on it, so they called out the water stains. Now, appraisers won't go up into the attics. They're not required to do that. So if there's active leaks, but you can't tell there's active leaks, it might not get called out. And that's why inspections are important, because the inspector is going to find those more than an appraiser would. But that is VA in a nutshell. Now, RD loans are rural development. That's what it stands for. It's through the USDA. These are a little more stringent, but they're a great product because they're zero down loans. Now, what's different about these? These can't be income producing. So like not a duplex. They have to be of modest size. So not like this huge mansion out in the middle of farm field. But they have kind of the same stringent requirements that a VA and an FHA have. The missing railings, the termite damage, the large cracks in the foundation, roof damage, exposed wiring, peeling paint, old broken decks. And then one thing that I haven't seen from RD that other people say gets called out is missing siding or the falling soffits. I haven't dealt with houses with missing siding or falling soffits, so I don't know if those would actually get called out. But it's on the list for what appraisers will call out, so I wanted to include it here. And just because we're talking about appraisal standards, let's just throw in conventional just so you have it. A conventional will look for mold, active roof leaks, curled or cupped roofing, meaning it's super, super old. Electrical or the plumbing just not working in general. Settlement foundation issues, but they have to be like big issues. Environmental hazards like an unknown substance in gallon barrels or, a leaking fuel tank. And then water seepage, if there's standing water in the basement, they might call that out, although I've seen it not get called out. So conventional is a very easy appraisal. They're in and out in like 5 minutes. They don't really look for a whole lot of stuff. They don't care about peeling paint. They don't care about handrails. They don't care about cracked windows. This is like the most lenient of the appraisals. But that being said, if your home does not fall under a VA, an FHA, or a RD loan appraisal standard, don't offer it unless your sellers are aware of what could potentially be called out. You need to walk your sellers through and be like, hey, these are the things that I am seeing that could get called out. By not offering these lending standards, we do limit our pool of buyers. However, if we do offer these, then there's a chance that they might need us to help repair them. Are you prepared for that cost? Most of the times it's going to be, well, let's just see what happens. Okay, well, if we just see what happens, I just told you what's happening. The appraiser's going to come in and say, this sucks. And then the buyer's going to be like, hey, I can't afford this. You need to fix it. And then we're right back at this conversation. So I need you to decide if you're going to go ahead and list with all of the lending standards, or if you're going to say, no, my house does not meet a VA and FHA loan, and I'm not in an RD area. So let's only offer conventional and cash. Because you know what's going to happen? The FHA clients and the VA clients that can afford to do their own repairs, their agents are going to call you and be like, hey, I saw you're not offering this. These are the things that I can see in the photos. Are there anything else that we should be aware of? Is this even worth seeing if we're willing to do the appraisal repairs? If we're already prepared for this, or put it in the notes. Say, hey, we are offering FHA on the basis that the buyer is going to fix everything. Just put it right in the agent notes. So then we know. But stop putting FHA and VA and RD on a home in the city that has a Michigan basement with standing water and the original windows that are cracked in every location and a roof that's literally not a roof anymore because it's so old and it's so deteriorated. What are you even doing? Where is your training? You just got it. You just got the training from me. So here you go. You're welcome. Now do better.